And as part of the 1.3 trillion will be costs of the legal action that will continue on June the 6th. Now let's get into the world markets for today. Markets are closed in Asia Pacific region already. So Australian stocks down today following an overnight slump in oil prices, as well as the other commodities when the US dollar came back to a 15-month high. The resource heavy S&P ASX 200 index closed down 1.5%. Oil prices down overnight on renewed fears of a supply glut in the market. Brent crude, which is used as an international benchmark, was down 1.9% overnight at $44.97 a barrel. In China, the Shanghai Composite was down 0.2%, while in Hong Kong, the Hang Seng Index fell 228.4 points. In South Korea, the benchmark Kospi Index down 0.5%. In Japan, the markets are shut for 3 days of national holidays and will reopen on Friday. Let's cross the Atlantic to the west. Down from Asia, we move to Europe to update market activities. DWTV financial correspondent for Channels Television, Konrad Wilson, is joining us now from Germany, from the Frankfurt Stock Exchange. And we're starting with the big losses today from the mining stocks. Konrad, good afternoon. Let's look at how the prices are falling along with the price for copper, iron ore, and other commodities. This is a resurgence of the dollar that's been weakened for a couple of days. Looks like the global concerns are back in full scale from the commodities front. Talk to us, Konrad.
Well, definitely investors are more concerned about the situation of the global economy again. They are more concerned than around about 2 weeks ago, because something significant has changed since then, and that's basically economic data, especially coming in from China. Remember, 2 weeks ago, it was reported from China that the month of March was pretty strong, much stronger than what economists had forecast. And not only in the retail and services sector, but also in manufacturing, credit growth in China was stronger than expected in March. When that was reported in China, this had caused a lot of increases and a lot of buying on the stock trading floors. But since then, the data we've been getting, especially the data during the last few days from China, has been indicating some weakness, and that maybe this positive month of March was a bit of a flash in the pan in China. It definitely is not so that the recovery in China is strong. This transformation that the Chinese economy is going through is a very bumpy ride. What's more, we've been getting data from the United States, which has been disappointing. The manufacturing sector is not doing as strongly as economists had forecast. And a lot, of course, depends on the Federal Reserve and the perspective whether or not it's going to increase the interest rates soon again. Opinions among economists are divided about that, more or less, and that is why, there's more concern on the markets again.
Yes, Konrad, as we speak right now, we have the US ADP employment data on the streets. Disappointing. Dollars suddenly weakening. Euro and the yen are moving higher, including the pound, the British pound. So, if we stay with the main streets, the concerns about Brexit for the UK. Talk to us about the European market. I'm looking at the German DAX index across your shoulder there, down, heading south to the bottom of that curve. Talk to us about today's trading day, specifically Europe, bringing in the UK weak manufacturing data on Monday and the construction data coming in not so good as well.
Yes, shortly, if I may, you mentioned the ADP jobs report. I wonder whether you heard the, sounds right behind me on the trading floor while I was giving my first answer. And I sort of wondered, while I talked to you, what the reason for this was. And obviously, it was the not so good jobs report from the United States that made traders right behind me get a bit upset there. Talking about the United Kingdom, the Brexit, of course, the discussion about this this seems to have a very paralyzing effect on the economy there. Now, the data we've been getting from the construction sector there has to do with fewer confidence because of Brexit. Also, there are concerns that the real estate market, especially in the south east of England, might be overheating again. All this is causing concerns, and but I also have to say that is more or less a UK problem. All of Europe is united, being concerned about what's going on in the United States. I mentioned the economy there, the manufacturing sector. Now, of course, we have the presidential election with Donald Trump likely to become the Republican candidate, and he's a candidate that most people here consider to be a maniac. And also, of course, we have this discussion about TTIP, free trade between the US and Europe. These negotiations seem like they're failing at the moment. That's not exactly, you know, a situation where the confidence of investors is really boosted.
So our investors, Conrad, let's wrap it up. Are they still worried about the earnings? Are there concerns about it? We have Time Warner earnings lifted by HBO and what have you. Priceline stock tumbles because of Outlook as well, Facebook and others, Tesla as well. Talk to us about some of the earnings on the street today.
Yes, always look at the bright side of life. I will give you a few examples of companies that managed to beat analyst expectations, both here in Germany. Siemens, the technology giant, came in with better results. Also, Heidelberg Cement, a large company, a member of the DAX that produces building materials, managed to beat analyst expectations significantly. And Møller-Mærsk, the large shipping company from Denmark, of course navigated through tough times during the first quarter given the situation in the global economy, but they also managed to come in with earnings much better than anticipated. All these shares are big gainers today in an, well, I also have to say, overall quite weak stock market.
Yes, Conrad. Yes, some of those earnings are good. Siemens doing a lot of engineering in the power sector in Nigeria, but of course the shipping company making money. Of course, they're the one doing all the goods. Thank you so much, Conrad. Do have a great day, and the rest of the GWTV team for Channels Television at the Frankfurt Stock Exchange. When we come back after the break, Abraj Group, a leading private equity investor based in Dubai, has just made an announcement of an IPO done on the Tunisian Stock Exchange. The first story will start from North Africa. Stick with us. We're back in one.